I wanted to talk to you specifically about what you think's happening because of COVID-19, how it's going to affect buying behavior and investment in the EV thematic, and obviously which you play into with your Cobalt. So what do you think the impact is going to be on
has to be
all of that?
Profoundly negative.
Right.
Anyone who gets up and says otherwise doesn't understand the physical dynamics of what's happening in the market and hasn't really thought around what the implications are. But I think Cobalt, it's interesting for a couple of reasons. I mean, demand, it's not weakening, it's getting crushed, completely decimated. I mean, I've never seen anything like it. You had China autos probably down 80% in the Q1, all the Western automakers down 40, 50% Q2. Many of the big automakers using $100 million a day. And so you've had, from a supply chain perspective, you've had this massive, we're just really at the start. And I think this is where it's interesting. If you look at what's going to play out over the next 3 to 6 months, we're really at the start of this process because COVID, from a supply perspective, is really just started. But you've got customers who aren't buying or can't buy because they're locked in their homes, manufacturing facilities that are shut. So if I'm a steel mill and I would have been getting ferronickel, ferrochrome, cobalt, moly, I mean, all these deliveries, I don't want that. That's getting pushed back to the traders who are pushing back to the producers. And this shock is coming through the system and it's going to take time to flow through. But if you look at what's happening to end demand on cobalt, I mean, electric vehicles, there's no positive scenario near term as to what's happening for EVs, clearly. Autos are being crushed. But as you look forwards, I do think that the Chinese, obviously, they're trying to come back on. Their biggest challenge, from what I understand, is really their export markets are off, but they're trying to kind of turn their economy back on. Their autos are trying to start again. And they're obviously, again, those subsidies, the incentivizations, the government prioritizations for electric vehicles, that's flowing back in. But any way you look at it, electric vehicles is going to be, I mean, the numbers are fluid, but it's going to be a significant reduction even over last year, and the talk of growth rates is gone. So that's the bad news on EVs. But is that a structural permanent shift? I can kind of talk around that. I don't believe so, but it is going to create a massive dislocation in the supply chain across 2020 that people weren't expecting. I mean, aerospace. So that's on the electric vehicle side, which is obviously cobalt chemicals. With cobalt metals, aerospace, pretty hard to be bullish on aerospace right now. I would suggest that that's kind of 30, 40% down. Oil and gas, pretty difficult to be positive on oil and gas exploration type drilling for cobalt, cobalt alloys, etc. So demand is bad, but I think taking away from that, cobalt's kind of unique because you've got 3/4 coming out of one country that's highly unstable. So, I mean, we all hope that Africa, including the Congo, gets through COVID. I mean, we're sitting in a part of the world where we're relatively very fortunate. There's some other parts of the world which don't have the health infrastructure, which already have immune-compromised populations because of HIV, which don't have the efficiencies or the governance, perhaps, that we're able to rely on in the West. So, I mean, we're all hoping that Africa kind of holds together as a continent, and particularly the DRC, because there is no safety net in the DRC if something goes wrong. But clearly, 3/4 of the cobalt coming out of the DRC, I mean, for context, it's twice the size of OPEC on the oil market. So it kind of matters. In terms of what we're seeing and hearing on the DRC, so the major mines are still operating. Some of the smaller ones, Kapoi, Soko, Kisaveri are shut. But the big mines, your Katangas, Tenkis, etc., are continuing to operate. The border currently is back open. Because obviously you've got two borders to get the product out of DRC. You've got to get through Zambia, then you've got to get through Zambia across into South Africa and down to Durban. South Africa's shut, so the port of Durban is shut. There's material coming out east through Dar es Salaam. I've heard material coming out through Mombasa as traders look to use alternate exit routes. You've got, the trucking, if you've ever been to the DRC, the border with Zambia is an unmitigated disaster at the best of times. Just queues stretching as far as the eye can see and a lot further. So that's obviously there now, but you do have sulfur and lime and consumables coming across. So the mines in the DRC are stockpiling aggressively on the expectation that there could be some interruptions. Expats are gone, simplistic and broad statement, but a lot of expats, South Africans who had their families in South Africa, they didn't want to be sitting in the DRC. So a lot of the critical technical expertise, major projects are being cancelled. So I think it really depends. So what the outlook for cobalt is very, very binary as to what's going to happen to the DRC. They're behind us. The advice that I've seen is that COVID peak is probably kind of you're looking at June for week 1 June, week 2 June, in terms of when it's likely to genuinely flow through. And clearly the potential market impact is profound. I mean, cobalt, metal bulletin SG grade, I think is trading at around 1540, 1550 today per pound. So that's inconsistent with demand getting completely destroyed. If you looked at what's happening in the oil market, obviously, I mean, that shows what happens when demand disappears. So, which just illustrates that the cobalt market, there is this uncertainty around what's going to happen in the DRC. The Chinese refineries have inventory for now, but that inventory is going to last, it's not going to last multiple months. There's material obviously sitting in Durban, which is waiting to get out as and when the ports open again. But COVID's also not going to go away. So, I mean, one of the greatest challenges of the DRC is logistics. It's one of the most painful places to get a product, to get consumables in and to get product out anywhere in the world. It costs you probably $300 a tonne to get it out in the back of the truck, whether it's copper cathode, cobalt hydroxide. Zambia's installed a 14-day quarantine period so that any truck drivers coming. So if you're a truck driver, you come in from South Africa, you get a 14-day quarantine period on the entry to Zambia. You go to the DRC, you come back, you've got another 14-day quarantine period. So trucking delays are probably only up 2 or 3 days currently. Clearly, there's a lot more truck drivers. I mean, there's no shortage of guys wanting to drive the trucks for now, but the potential, if South Africa and Zambia, and particularly the DRC, they're different. There's potential for social unrest in the event of these big mine closures. Clearly, to use the artisanal supply as an example, people aren't mining, you don't have women and children mining artisanal cobalt because they choose to do that versus open a corner store selling clothing. They're doing that because that is their option to put food on the table. Many people are working at the big mines, they're big employers. The social implications of these sites shutting is profound. So, I mean, I don't profess to have a crystal ball as to which way it's going to go, but the potential market dislocation, and it is obviously enormous. And I guess what it's highlighted is, in our discussions with OEMs and other end users, clearly the DRC's, it's been there and people have been uncomfortable with certain aspects of the DRC, whether it's governance, whether it's the artisanal mining for a long time. But now they're looking at security of supply chains and they're realising that this really is a profound risk to their business, being reliant on a critical component for electric vehicles or for steel production from a part of Africa, which is obviously a long, long way from you having the confidence that you're going to get the product and the input you need on time.
Okay, that's a fairly devastating picture you're painting with regards to obviously demand, which, as you say, you're not quite sure when that kind of comes back on because it's a slightly dislocated logistics supply chain at the moment. So if Chinese come on earlier than the rest of the world, we're playing sort of catch up there. I know you were talking cobalt DRC because cobalt is a big part of the DRC economy. Can I just ask before we get on to you, what do you think it's going to mean for the other battery commodities, the nickels of this world, the lithiums, the graphites, etc.? Are they as disrupted as cobalt?
I think no commodity has 3/4 of supply coming from one country. I mean, clearly Indonesia is incredibly important for the nickel market. And clearly other countries are important for lithium. I mean, I don't pretend to know as much about the lithium market, but equally from what I see is lithium was, everyone there was an expectation that lithium was in oversupply before this began. So that kind of implies that lithium's in for some challenges. But I think if you do the lithium-ion batteries, the components are each subject to the discrete market forces. So, nickel is going to be a core component of the battery moving forwards. Everyone wants a car that goes a long way and gets there quickly. That's obviously a critical part of what's going to underpin the success of electric vehicles. Everyone wants to get there quickly and get there fast, but get there safely, hence the importance of cobalt. If cobalt was easy to engineer out, we wouldn't be having this discussion. There's been a lot of smarter people than I have been looking at this challenge for a long time, but as of today, it hasn't been possible to engineer out in a way that provides the same performance, etc., as a 811 or one of the high nickel NCA chemistries Panasonic and Tesla run.